Take second chapter. Goodwill we were doing, right? I am audible to you now?
Ma'am, should we take the... Yes, ma'am. Should we take the PDF version, ma'am?
PDF, yes dear. Goodwill chapter we were doing, right? Chapter
Yes, ma'am.
Goodwill.
Ma'am, could you revise from the last class?
Yeah, fine. I can revise. First, you should know what is the meaning of goodwill. Goodwill means reputation of a firm. Okay. What is the meaning of reputation of a firm? For example, if a firm exists for 20 years, 25 years, 40 years, and the firm is selling quality product to the customers, then what will have, it will have a very good name in the market. Customer will go regularly on frequent basis to the shop and purchase the quality product. And the old customer will also tell to their friends, relatives that this shop sells very good product at reasonable rate. So more and more new customers will also enter the market. All this happens only because of the good name the shop has in the market. That is only goodwill. Goodwill is nothing, reputation of the firm. Okay, that is only goodwill. So, but in accounts there are some methods to calculate goodwill. We will learn one by one what are the methods how to calculate goodwill. That only we are going to learn in this chapter. And when the goodwill is calculated, there are certain situations when the firm needs to calculate goodwill. Suppose any new partner is coming into the firm, admission of a partner. In that case, firm will calculate goodwill. Suppose any existing existing partner is retiring from the firm. There are suppose 3 partners A, B, C, and C is retiring from the firm, means C is leaving the firm. In that case also what will happen? The firm will calculate goodwill before retirement of the partner. And in the same way, when any new partner enters the firm, then also the firm calculates goodwill. Suppose death happens due to some uncertainties, any partner dies. In that case also what will happen? Kirtika, good evening dear.
Good evening, ma'am.
Yeah, take goodwill chapter.
Okay, ma'am.
Yeah. So these are the situations when the firm needs to calculate goodwill. And we learned how to calculate sacrificing ratio and how to calculate gaining ratio. There are formulas to calculate. First of all, what is the meaning of sacrificing ratio? Suppose A, B, C are old partners. What is the meaning of old partners? They are running the partnership business for the last 4 years. For example, A, B, C are the 3 partners who are running partnership business for the last 4 years. After 4 years, some new partner wants to join the partnership firm. A, B, C, all the 3 of them, they decided, okay, we will admit the new partner, because when a new partner comes, he will bring capital, because he needs to invest something when he joins the firm. That is only capital. He will bring cash and he will also bring goodwill. Goodwill means, since for the last 4 years ABC they have run the business and they are having a good name in the market. So when when D, the new partner, joins the firm, definitely he is also going to get the benefit of that good reputation the firm is having. For that he will pay some amount. So what will happen when any new partner comes? Then only the sacrificing ratio is calculated, because the old partner have to sacrifice their share of profit. Suppose they are earning 10,000 rupees before the admission of the new partner. Now also they will earn 10,000 only, but out of that 10,000 their share of profit will get reduced, because they have to give to the new partner also. So now they have to share the profit among the 4. Previously they used to share the profit among the three. Now this profit will be distributed among all the four partners, so they have to sacrifice their share of profit. So we calculate sacrificing ratio, means which partner sacrifice. Sometime one partner may sacrifice, sometime all the three may sacrifice, sometime two partner may sacrifice. Don't worry, each and everything we will learn, no need to worry. Just try to understand what I am explaining you. Each and every concept I will make you clear. Just understand what is sacrificing ratio in the beginning. Now what is gaining ratio? When we calculate gaining ratio? At the time of retirement. Suppose ABC are old partners, they are carrying their business. Suddenly C wants to retire from the firm. Retire means C wants to leave the firm. So C will give notice before 3 months or 2 months as per the agreement, and C will get retirement from the firm. In that case also goodwill is calculated. Imagine ABC are partners and the 10,000, we will take the same example. 10,000 is the profit. So this 10,000 is distributed among the three partners. Suppose now C is retiring from the firm, he is leaving the firm. So his share of profit will be gained by the two partners A and B. Profit will be the same 10,000 they are going to earn, because firm is going to continue. Firm is not going to close. Only partner is going to retire from the firm. Okay. So profit will remain the same. But what is the difference after retirement? Whatever C used to get, his share of profit now will be distributed among A and B. So A and B will get more profit than before. That is why we calculate gaining ratio. How much the A will gain and how much B will gain after C's retirement. Means C's share of profit, how much A will get and how much B will get. Any doubt till here? Kirtika, Amrita, Roshni, any doubt you are having, dear, till here? Any doubt?
No, ma'am.
Okay.
No, ma'am.
Fine. Kirtika, what happened here? Varsha, why she is not coming?
I don't know, ma'am.
She came to school today.
Yes, ma'am.
Okay. What happened? She forgot or she is sleeping? Why she didn't join the class? Okay, fine. So what is the formula for calculating sacrificing ratio? Old ratio minus new ratio. Okay. This is the formula. Old ratio will be given in the question. New ratio will also be given. Just you have to deduct and calculate the sacrificing ratio. If new ratio is not given, how we will calculate? Each and everything we will learn. Don't worry about anything. Whatever I am teaching, try to understand and follow it. Each and everything I will teach you. So don't worry. Gaining ratio. What is the formula for gaining ratio? New ratio minus old ratio. This is the formula to calculate gaining ratio. And as I told you, the features, characteristics of goodwill, it is intangible asset. What is the meaning of intangible? Intangible asset means those assets which we cannot see and touch. Goodwill, reputation of the firm. Can we touch the reputation of the firm? Or can we see? No, we can just feel it. Okay, this firm is earning good amount of profit. This firm is selling quality product to customers. These things we can feel, but we cannot touch those things. Reputation we can't touch. That is why goodwill is intangible asset. Okay. And in goodwill there are two types of goodwill. Self-generated goodwill, purchased goodwill. Goodwill is also purchased. Goodwill has monetary value. And if a firm purchases goodwill, then that purchased goodwill is always shown in the asset side of the balance sheet. Suppose there is self-generated goodwill, means it doesn't have any monetary value. We never show it in the balance sheet. There are two types of goodwill. One is self-generated, another one is purchased goodwill. We always show in the balance sheet only purchased goodwill which has monetary value. Self-generated goodwill doesn't have any monetary value, so we don't show it in the balance sheet. Okay. Till here any doubt anyone has? Kirtika, Amrita, Roshni, please do not hesitate, dear, ask me if you don't understand anything. Yes?
Ma'am, what is amalgamation?
Amalgamation means suppose there are two firms, okay, selling the same product. For example, toothpaste. Now there are different brands. For example, Pepsodent, Colgate, Close-Up and many more who are selling toothpaste. Toothpaste is the only one product, but different companies are selling toothpaste in different names. Suppose two different companies selling the same product. For example, Colgate and Close-Up both are selling toothpaste only. These two companies, they join together and form a partnership business. That is known as amalgamation. Understood, Amrita? Yes, Amrita?
Yes, ma'am.
Yeah, fine. Kirtika, are you clear with fundamentals of partnership, dear?
Yes, ma'am.
You got book from your school?
Ma'am, they said they'll be giving it on June, ma'am.
They are giving it on June?
Yes, ma'am. They said it's a revised version. So
Oh,
takes
fine.
time.
Okay, fine. So they are sending PDF. School is sending the PDF questions of chapters.
They give us worksheets, ma'am.
Okay. You are having any first term or like that? Any exam you are having?
We have periodic test 1 in April end, ma'am.
Okay. April end you are having.
Yes, ma'am.
Okay, fine. So which chapter is coming for that? Fundamentals is coming.
I guess partnership, goodwill, and one more chapter, I guess.
Oh, now which your school is in which chapter?
A third chapter, ma'am.
Third means admission of a partner.
A profit sharing.
Okay. They are running very fast. Very fast.
Yes, ma'am.
Okay, fine dear. No issues. Page number 4. Please take page number 4. Calculation of goodwill. There are different methods as I told you. We are going to learn one by one. First method is known as average profit method. These are the methods to calculate goodwill. Second method is weighted average profit method. Third one is super profit method. Fourth one is capitalization method. All these are the different methods to calculate goodwill. In question they will mention which method you should use to calculate goodwill. So no need to worry. They will mention it clearly. Calculate goodwill by average profit method. So just you have to understand how to calculate using this method. What are the formulas? That's it. You should be clear with the concept. You can solve. Now, first we will go for first method. Calculation of goodwill. Average profit method. So what is the formula? In each and every method we have formula. You have to follow that formula. Goodwill equals to average profit into number of years purchase. What is the formula for calculating goodwill through average profit method? Goodwill equals to average profit into number of years of purchase. Now how you are going to calculate average profit? Again, if I am saying that average profit into number of years of purchase equals to goodwill, you should know how to calculate average profit. It is also very easy. In your question, the 4 or 5 years profit will be already given. Just you have to add sum total of all years of profit, then divide by the number of years. For example, 5 years profit is given. Separate profit of each year will be given in the question. Just add all the different years profit together, and suppose 5 years profit is given, divide by 5. You will get average profit. How to calculate average profit is clear? Yes?
Yes, ma'am.
Fine.
Yes.
Into number of years purchase will also be given in the question. You have to read the question very carefully. They will give the number of years of purchase. So average profit equals to sum of profit divided by total number of years. Don't worry, we will be doing the sum, then you will understand it more clearly. Now, important note. If there is any abnormal loss, it will be added back. What is the meaning of abnormal loss? Abnormal loss means, for example, suppose any business suffered loss due to earthquake, flood, fire, theft. These are known as abnormal loss. This is not business loss. This is not the normal loss. What is the normal loss of the business? Except this, suppose business is not able to sell its product more, so it is suffering loss. That is normal business loss. But if the business suffered loss due to earthquake, flood, or anything like that, fire, theft, these losses are always known as abnormal loss. So what we do in calculating average profit, suppose in question they will say loss due to fire, loss due to theft, loss due to earthquake, flood, anything like that. So you should understand it is abnormal loss. They will mention the date, everything will be given in the question. So what you have to do for that loss, just you have to add back in the profit. Why we are adding back in the profit? Just imagine PL account of class 11th. When we prepare PL account, a PL account has two sides, debit and credit. It is a nominal account. In the debit side, you write all the losses and expenses of the business. In that, abnormal loss also come. Normal loss also we write. Both the losses we write. In the same way, in the credit side of PL account, we write the incomes, direct, indirect, all income we write. So, profit is increased if we add some abnormal profit. Now what is abnormal profit? Suppose business is having any asset like building, plant and machinery, and business is selling that. So by selling that, business is earning profit. It does not relate to normal profit. Normal profit means if business sell any goods in which it is dealing and earns profit, it is normal profit. But if business is selling its assets and earning profit, it is not normal profit, it is abnormal profit. So unnecessarily it increases the profit. In the same way, this abnormal loss unnecessarily decreases the profit. These losses are not the normal losses of the business. So when we write in the debit side of PL account, what happens? It decreases the profit. Suppose total profit is 20,000 for example. Now there is abnormal loss 10,000. So where you will write this 10,000 in PL account? Obviously in the debit side. Then out of 20,000 we have to deduct 10,000 and the profit, that is the net profit, will come to 10,000. So this 10,000 is abnormal loss which reduces the profit. That is why we are adding back, because in calculating average profit method, we consider that abnormal losses should not reduce the profit. And if it has reduced the profit, now we should add back to get the correct profit. This is the logic behind adding the abnormal losses back to profit. You are understanding or any doubt? Amrita, Kirtika, Roshni? Yes?
No doubts, ma'am.
Okay. So, if there is any abnormal gain, as I said, abnormal gain means we are business is earning profit by selling any of its asset. That is abnormal gain. Again, it increases the profit, but we are not earning this profit by selling the products in which business is dealing. That is why we are calling it as abnormal gain. Again, it will increase the profit unnecessarily. In this method, that is average profit method, we should calculate the correct profit. That is, what is the meaning of correct profit? Correct profit means the profit earned by the business by selling its product, not by selling asset, or not by suffering loss due to earthquake, flood, all these things. That is why again what we have to do, we have to deduct any abnormal gain so that business so that we can calculate the profit earned by the business correctly. For example, number of years purchased is given 3. This is example only. We will do the question, so don't worry. In order to understand what is abnormal loss, abnormal gain, I will make you understand. Suppose in the question number of years purchased is given 3. Now these are the suppose 1, 2, 3, 4, 5. 5 years profit is given. First year 25,000 profit per year, then 35,000, 30, 40, 50. In different years, business is earning different amount of profit. Now, how to calculate? goodwill by using average profit method? First you have to calculate average profit. How you will calculate? As I told you, add the sum total of the profits. Sum total means you have to add 25,000 plus 30,000 plus 35,000, 40,000, 50,000 profit of different years together you have to add, and then you have to divide by total number of years of profit given. How many years profit is given? 1, 2, 3, 4, 5. Divide by 5. If you add sum total of these profits, you will get 1,80,000 divided by 5, 36,000. Now what is the formula for calculating goodwill? Average profit into number of years purchased. Number of year purchase given in the question 3. Average profit already we have calculated. So 36,000 into 3, 1,08,000 is the answer. Goodwill equals to 1,08,000. Any doubt? So far any doubt you are having? Amrita, Kritika, Roshni, please let me know any doubt.
No, ma'am. No.
Fine.
No, ma'am.
Very good. Next, page number 6. Now we are going to learn, as I told you, the same thing will come, but still we will revise. Abnormal losses. What are abnormal losses? Always remember, when you calculate goodwill by using average profit method, you should add back the abnormal losses. I have said you the logic also why we are adding back the abnormal losses. So first you have to know what is abnormal losses. Voluntary retirement payment. Suppose in the question it is given voluntary retirement payment. If you find this term in the question and the amount is given, just add back to profit. This is abnormal loss. Loss by fire, loss by theft, loss on sale of asset. Yes, if business is selling any asset and suffering loss, again it is abnormal loss. You have to add back it. Now, what is abnormal gain? We have to deduct abnormal gain from the profit. Lottery. Suppose business has purchased some lottery tickets and won it. So that amount doesn't come by selling the goods. It is abnormal gain. We have to deduct it. This is not business profit. Dividend received. Suppose business has invested somewhere else and has earned income, that is known as dividend. Purchased shares of some company and earned dividend, that is also indirect, like that income does not relate to selling of products, so known as abnormal gain. Again you have to add back. Interest on investment. Suppose business has invested its cash somewhere and has earned interest on it. Again what you will do? You have to add back that interest on investment. Sorry, you have to deduct it. Okay. Profit on sale of asset. If business has sold any asset and earned profit, again you have to deduct it. Claim against insurance. What is the meaning of claim against insurance? Suppose business has insured its goods and due to loss or anything, the insurance company has given some amount. That amount to compensate the loss, that is also indirect income. We have to deduct it because all these income business did not earn by selling its product. So we have to deduct. This will not be considered as profit when we calculate goodwill using average profit method. Then future expectation expenses. Suppose business has made some business is thinking that in future this expenses may happen and these expenses did not happen and business recorded in the debit side of PL account. Again it will reduce the profit. Then what you will do? You have to, what you will do? If future future expectation expenses are given, for example insurance premium. What is insurance premium? Any time fire may occur. We don't know. In godown where goods are stored by the business, fire may occur, theft may occur, earthquake may come, flood may come. We don't know the time. We don't know anything. Any uncertainty business may have to suffer in future. For that, what business does? It insures all its goods in order to compensate the loss. So insurance premium will be paid regularly. This insurance premium is paid for future only. Nothing has happened now, but business is paying that, na? So again this will reduce the profit. Remuneration to be paid. Suppose any salary to be paid means in future we are going to pay. Now we didn't pay anything. We are expecting in future some salary may have to be paid by business to its employees. We are going to pay. We didn't pay. These are the expected, future expected expenses. These will reduce the profit. So again we have to add back these expenses. Future expectation expenses will be added back. Unnecessarily we have reduced the business profit. Any doubt, Amrita, Kirtika, Roshni? Any doubt you are having, dear, so far?
No, ma'am.
No, ma'am.
Fine. Next. Calculate. Now the question starts from here. Calculate goodwill of the firm on the basis of 3 years purchase of the average profit of the last 5 years. So goodwill of the firm we have to calculate on the basis of 3 years of purchase. As I told you, number of years of purchase will be given in the question. So here it is 3 years. Then last 5 years profit is also given in the question. The profit for the year are like this. You will have the question, year, amount. So 2013, 2014, what is the meaning of this? When our financial year starts, financial year of business starts from 1st April to 31st March. So 1st April 2013, the financial year starts, and when it ends, 31st March 2014. What is the profit given? 4 lakh rupees. Then again in the second year, that is 2014 to 2015. Again 2014, 1st April to 31st March 2015, 5 lakh. Then 2015, 2016. This is the financial year from 1st April to 31st March. 60,000 it is written in bracket. In accounts, whenever any loss is there or any negative amount is there, we write it in bracket. So this bracket shows that 2015-16 financial year business has suffered loss of 60,000. Always loss you have to deduct from profit. All the profit add together, and if any loss is given in the question, you have to deduct it from total profits. 2016 to 17, 1,50,000 profit only. 2017-18, 2,50,000 profit only. You will have question in this way, then additional information will be given. What is additional information? I told you na, if any abnormal loss is given, that is only additional information. If abnormal loss you find in additional information, just add back to the profit. If any abnormal gain is given in the question, deduct it from the profit. That's all you have to do. Now, first adjustment we will read. On 1st January 2016. So, whenever you read the date, first you should come to know which year this date falls. Okay, 1st January 2016 means which year it will come. I told you from 1st April to 31st March, every financial year begins. So, can you tell me, can anyone tell me when the year will fall on 1st January 2016, in which year it will come? Yes?
From 2015 to 16.
Very good. In that year only it will fall. So what has happened in that particular year? 15, 16 already there is loss of 60,000. Okay, we will see what has happened. On 1st January 2016, a fire broke out which resulted into a loss of rupees 3 lakh. Okay, some fire has occurred and due to that fire, business has suffered 3 lakh rupees loss. So you have understood it is abnormal loss, and this particular year we have to what? We have to add back this loss. A claim, but the question did not end. Now again a claim of rupees 70,000 was received from the insurance company. So the goods might have insured by the company. Now after the fire has occurred, the insurance company is paying 70,000. Now we will see. Before this, what you have to do, you have to prepare adjustment table in this way. Page number 8 you can see. Adjustment table needs to be prepared in this way. Particulars, first you have to write particulars. Then what you will write? 13, 14, the number of years given. 14, 15, 15, 16, 16, 17, 17, 18. Total 5 years is already given. So all these 5 years you have to write.
Ma'am,
Varsha.
ma'am, 8th page is not clear, ma'am.
Oh, 8 pages not clear. Okay. Varsha, you have joined now, dear.
No, ma'am, I was there in between, but then I left again because I had some connectivity issue.
Oh, okay. That's what I thought.
I came in the middle for like 10 minutes, but I left again.
Okay, dear. I thought why you didn't join the class. Okay, fine, dear. Page number 8 I'm sending, dear. Just
I
a
took
moment.
ma'am, I took. Yes, yes, sir.
Okay, no, it's not clear, dear. I will send once again. Just wait for the moment. I will send you in WhatsApp group. It's not clear, I think. Just a moment. Page number 8. Just a moment. Now it's clear?
Yes, yes, ma'am.
Okay, dear. Okay, so you have to make table in this way. Okay, whenever average profit method you have to calculate goodwill, make adjustment table in this way. What you will write in this table? Particular column, then the number of years given. In this question 5 years is given. Year starts from 13 14, 1 year, second year 14 15, third year 15 16, fourth year 16 17, fifth year 17 18. Now profits or losses you have to write. It will be given in the question. First year profit is there 4 lakh. Second year 5 lakh again profit. But third year there is loss. 60,000 is the loss. Then what about the fifth year? Profit only 1,50,000. Then fifth year also profit. You have to write in this way. Then you have to go for adjustment. That is why we are making this table. So first adjustment, as I told you, on 1st January 2016. So first you have to identify in which year this date falls. It falls on 2015 to 16. How we got it? Because as I told you, each and every financial year starts from 1st April to 31st March. So 1st January 2016 means the year will be like 1st April 2015 to 31st March 2016. So 1st April means 2015 to 16. In this year only 1st January 2016 will come. You have to identify first this thing. Then what has happened? You should go for it. 3 lakh rupees is the loss, abnormal loss. What you will do? You have to add. So in the second line write add. You have to write full abnormal loss. I have used short form. Please do not use abnormal loss. In bracket you can write loss by fire. What is that abnormal loss? Then in this year, that is 15-16, you have to write 3 lakh. You have to add this 3 lakh. Then what has happened? What about 70,000 they are saying? A claim of rupees 70,000 was received from the insurance company. Okay, so insurance company has paid 70,000 claim. Again, whatever we are getting from insurance company, it is abnormal gain. It is abnormal gain. Whatever we have studied in abnormal gain, claim against insurance company. If insurance company pays any amount to the business, it is abnormal gain. So what we do abnormal gain, we always, what we have to do, we have to deduct from the profit abnormal gain. We have to add the abnormal loss in the profit and we have to deduct the abnormal gain from the profit. Okay. So now what we are going to do, we are going to just deduct this abnormal gain. Okay. 70,000. That is why I have written in bracket. We are going to deduct this 70,000. Any doubt so far, Amrita, Kritika, Roshni, Varsha? Any doubt you are having, dear? Please ask me.
No.
It is
No, ma'am. No.
okay. It is clear. Okay. Then what you will do, we have to go for the next adjustment given. Adjustment, no need to worry, very simple. Just you have to understand whether it is abnormal gain or abnormal profit and in which year it falls. If this thing is clear, then you can adjust, because you know if abnormal loss is given in the question, we have to, what you will do? Abnormal loss means you have to add back to the profit. If abnormal gain is given, you have to deduct from the profit. That's it. Second, during the year ended, again focus on the date, 31st March 2018. Again you have to think in which year this will fall. So by seeing the date from when this year will start, it will start 1st April 2017. So 1st April 2017-18, this will come, 2017-18 only this will come. In this way you have to identify the date. Then what has happened? The firm received an unexpected tax refund of rupees 80,000. Again it is indirect income, abnormal gain you can say. Indirect income means abnormal gain. Again abnormal gain is given from, so how much? 80,000 tax refund firm has received. It is abnormal gain. We have to deduct that abnormal gain. From which year you will deduct? You have to deduct in 17-18. Less abnormal gain, in bracket you can write tax refund, then in bracket you can write 80,000, because we use this bracket to show the negative figure. We have to deduct 80,000 from the profit. That is why we are showing it in bracket. Then what you will do? Then very simple. Separately each year just calculate the correct amount of profit. For example, first year, that is 13-14. What, nothing, no adjustment is given. So the same profit it will come, 4 lakh rupees. Write it as it is. What about the second year, 14-15? Again, no adjustment. There is no adjustment in this year also. Same profit, 5 lakh. Write it. What about the third year? There are adjustments. 15-16, this 60,000 and 70,000 which we wrote in bracket shows the losses. We have to deduct these things from the profit. So 3 lakh is the positive amount. First write 3 lakh out of 3. From 3 lakh you have to deduct 60,000 and 70,000. So profit will come 1,70,000. So this year is clear to you. 15-16, how we got 1,70,000? Amrita, Kritika, Roshni, Varsha, it is clear, dear?
Ma'am, could you repeat the 15-16?
Yeah, fine. 15-16, like already loss is given in the question. This 60,000 is the loss. As I told you, whenever loss is given in the question, from the profit of that particular year, you have to deduct the loss. 60,000 is the loss given in the question. So from where you will deduct, where you will minus this loss? From the profit. And what is the profit here shown? 3 lakh rupees is the profit for this year. So you have to deduct 60,000 from 3 lakh. And what about this 70,000? Again we have written in bracket. Again you have to deduct. So just what you will do? You just add these two items, that is 60,000 plus 70,000, and deduct total amount from 3 lakh rupees. So you will get the actual profit for this year, 1,70,000. Amrita, now it is clear?
Yes, ma'am.
It's very simple, nothing. Whatever amount is given in bracket, just deduct from the positive figure. Nothing to understand. That's all, dear. Then 70, no adjustment is given.